Welcome to Byte-Sized Tech, where we like to keep things casual, have a little fun, while diving deep into the latest tech trends and gadgets.
Absolutely. I'm excited to be here and unpack all the exciting things happening in the tech world. It's definitely a dynamic landscape right now.
For sure. And speaking of dynamic landscapes, we've got to talk about the tech stock market. I mean, it's been a bit of a wild ride lately, hasn't it?
Yeah, no kidding. The NASDAQ 100 just had its longest losing streak since May 2022. Like 5 weeks in a row. That kind of gets your attention, right?
It definitely does. So the question everyone is asking, of course, is this just a correction? Or is this the beginning of something a little more intense, like a bear market?
Right. Well, from what I'm seeing, the general consensus seems to be leaning towards correction. And honestly, I think we can all breathe a little easier hearing that, right?
Yeah, correction sounds a lot nicer than bear market any day.
Exactly. And the reason behind this optimism, well, it seems to boil down to the difference between what economists call hard data and soft data.
Hard data versus soft data.
Yeah, think of hard data as the concrete stuff. We're talking about job numbers, actual income levels, the state of those household finances, things like that. And right now, those indicators are actually still looking pretty good.
Okay, so the actual numbers, the hard data, are painting a more positive picture.
That's right. That strong foundation of real-world economic activity is definitely reassuring. But here's where it gets a little interesting. The soft data, which captures more how people feel about the economy, like consumer confidence surveys and inflation expectations, those are showing some signs of softening, a little bit of weakness.
So we've got this sort of mixed bag of signals, which makes it even trickier to figure out what's coming next.
Precisely. And then you add in the expectation that the first quarter of 2025 might see a bit of a weaker GDP, partly because companies have been, well, kind of front-loading their imports. They're buying more stuff from overseas right now.
So even though that might sound negative in the short term, could that actually be a sign that companies are anticipating stronger future demand? Like they're stocking up, getting ready for things to pick up.
That's a really good point. It could definitely be a sign that businesses are taking a proactive, forward-looking approach. And when you consider the massive investments that companies like India, Apple, and TSMC are planning to make in the U.S., like we're talking about a potential $1.4 trillion over the next 4 years, well, that's a pretty huge vote of confidence in the American economy, wouldn't you say?
Yeah, I mean, $1.4 trillion, that's mind-blowing. Yeah. So maybe while the stock market is having this little freak-out moment, there's a lot of groundwork being laid for some serious long-term growth.
It really does seem that way. And on top of that, you've got the potential for a new funding bill that could provide even more incentives for companies to invest in capital expenditures. So the ingredients for a really strong future are definitely there.
All right, so let's zoom in a little bit and talk about the big players, the Magnificent Seven tech stocks, as they're often called. These companies have been leading the pack for so long, but it seems like most of them have actually dipped into negative territory for the year, even though Meta is still holding strong. What's going on there?
It's interesting, isn't it? For a while, it seemed like just being part of that elite group was enough to guarantee success. But now investors seem to be taking a more critical look, asking the tough questions like, okay, you're investing a ton in AI, but how is that actually translating into profits? And it seems like Meta has done a better job of articulating that vision, especially around their advertising business and how people are engaging with their platforms. For the others, maybe that connection between the AI investments and the bottom line hasn't been as clear-cut, and that's leading to some hesitancy on the part of investors.
It makes sense. It's not enough to just throw money at the latest trend. You have to show a clear path to how those investments will pay off. And it sounds like some investors are starting to look beyond those big names, right? This whole idea of being underweight the Magnificent Seven and focusing more on what they're calling spending beneficiaries companies in areas like digital infrastructure, general infrastructure, power, energy, even onshore production.
Right. And that shift in strategy suggests a belief that the benefits of all this tech investment are going to ripple outward. You need those foundational sectors to support and enable the growth of AI and other innovations. And it's important to remember that the market's gains this year haven't been solely driven by those top 7 stocks. In fact, our analysis shows that a huge chunk, almost 97% of the Nasdaq's recent decline, can actually be attributed to those companies, while other sectors, as well as European and Chinese markets, have actually shown some pretty decent positive growth.
Okay, so it's not this doom and gloom scenario across the board. There's nuance, there's differentiation happening.
Absolutely. And looking even further down the road, there's this really interesting idea that the adoption of generative AI, the stuff that's creating all this buzz, it's going to expand way beyond just the big cloud providers and chip makers. As computing power becomes more affordable, it's going to become a tool that businesses of all sizes across all industries can use to improve their productivity, their profitability. And honestly, I think that potential is just massive and probably not even fully priced into the market yet.
That's a really exciting thought. It feels like we're still just scratching the surface of what's possible with all this new technology.
We really are. It's an incredible time to be watching this all unfold. And speaking of things unfolding, we have to talk about the regulatory landscape, specifically antitrust, because things could be changing, especially with the potential for a Republican majority at the FTC under a Trump administration.
All right, so let's dive into that. If the Republicans do end up taking control of the FTC, what kind of changes are we likely to see?
Well, our sources suggest that the broader goal coming from the White House is to have a bit more control over those regulatory agencies. And while they're probably going to continue with the big tech antitrust cases that are already underway, and they'll still be actively reviewing proposed mergers, there's a sense that they might be more open to settlements.
Settlements, meaning?
Meaning that instead of taking these companies to court and potentially dragging things out for years, they might be more willing to reach agreements where, for example, a company agrees to sell off a part of its business or modify certain practices to address the concerns. This is a pretty subtle but important distinction. The previous administration often viewed those kinds of settlements, especially the ones involving divestitures, with a lot more skepticism. They were less willing to compromise.
So it's not necessarily about stopping antitrust enforcement, but maybe about changing the approach, being a bit more pragmatic.
Exactly. And it's important to remember that a lot of the big tech investigations that are happening right now, like the ones into Google's search dominance, Meta's alleged monopolization, the investigation into Apple, all of those actually started during the first Trump presidency.
Oh, that's interesting. So this isn't really a partisan issue as much as it is an ongoing effort to grapple with the immense power and influence of these tech giants.
Exactly. And it seems like the focus is on trying to bring more clarity and predictability to the whole merger review process. They want to avoid those situations where a deal gets stuck in limbo for years, creating a lot of uncertainty for everyone involved. It's about finding that balance between addressing genuinely anti-competitive behavior and creating a more stable environment for businesses to operate in.
Makes sense. It's a tough line to walk, but definitely important. Okay, now let's switch gears a bit and talk about Apple. It sounds like they've been doing some internal shuffling when it comes to their AI strategy.
Yeah, apparently there were some pretty ambitious promises made about Apple Intelligence upgrades, and the engineering teams are having a tough time meeting those deadlines. It happens.
It does, but with Apple, it's not something you hear about very often. So their response is really interesting. They've reassigned the oversight of Siri, which is a huge part of their AI ecosystem, to the executive who led the Vision Pro project. That's a pretty significant move, right?
Absolutely. Personnel changes at that level within Apple's leadership structure, they're pretty rare. It really emphasizes how seriously they're taking this. They want to get their AI strategy right, and they're not afraid to make changes to ensure that happens.
And the timing is interesting, too. Even though this move was reportedly in the works before those recent reports about delays, which were described as ugly and embarrassing, well, it definitely sends a message like, hey, we're on top of this, we're making adjustments.
It definitely does. I think it highlights the pressure that all these big tech companies are feeling. They can't just talk about AI, they have to deliver. And even a company as successful and well-regarded as Apple isn't immune to those challenges.
Totally. It's a race to the top, and everyone is feeling the heat. Speaking of pressure, we have to talk about Tesla and NVIDIA, two companies that are never far from the headlines, and for good reason. Tesla's stock has been taking a bit of a beating lately, and Elon Musk even held an unusual all-hands meeting to try and rally the troops.
Yeah, that was pretty fascinating to see. He was urging his employees to hold on to their stock, even bringing up Cathie Wood as someone who's still very bullish on the company's long-term prospects. It seemed like he was trying to project confidence, but you could also sense a bit of defensiveness, maybe even a little bit of worry.
Yeah, I mean, he called it stormy weather, which is a pretty apt description. But then there's this whole thing with autonomous driving. He's been saying it's just around the corner since 2016. It's starting to feel like a never-ending road trip.
And that's really the crux of the issue for Tesla's valuation. While their driver assist features are incredibly advanced, the full self-driving capability that Musk has been promising for years still requires human supervision. It's not truly autonomous yet, and until that changes, there's going to be a lot of skepticism about whether their current stock price is justified. The market wants to see that promise become reality, and the longer it takes, the more doubt creeps in.
It really feels like that promise is baked into their stock price. Any further delays or setbacks, and it could have a pretty big impact.
It could. And then you have NVIDIA, who also had a somewhat surprising week. You'd think Jensen Huang's keynote at GTC, their big AI conference, would have sent their stock soaring, but it actually declined.
So what happened there?
Well, their product roadmap and supply outlook seem pretty solid. They're launching some amazing new chips, and they seem to be handling the supply chain issues effectively. The questions that investors seem to be grappling with are more about demand. Will the demand for these insanely powerful accelerated computing chips continue to grow beyond the current focus on training AI models? And what about the potential for competition from the hyperscalers, the big cloud companies, who are increasingly designing their own custom chips?
So it's not just about having the best tech, it's about who's going to buy it and whether NVIDIA can maintain its dominance as the market evolves.
Exactly. And then there's the issue of NVIDIA's profit margins, specifically their gross margins, in the second half of the year. Investors are a little concerned about the potential impact of their new Blackwell series, which packages two GPUs together. That kind of complexity can sometimes eat into margins.
So how those gross margins play out will be a key indicator of NVIDIA's future performance. Right.
It will. It's definitely something to keep a close eye on. And on a completely different note, it was reported that NVIDIA's CEO, Jensen Huang, was actually surprised to learn that there are publicly traded quantum computing companies. He was like, wait, what? Those exist?
That's amazing. Even at the top of the tech world, there are always new things to discover. Okay, let's wrap things up with Micron. They also had a bit of a rough week, disappointing investors with their profit margin outlook, even though their sales and overall profits were strong. What was going on there?
It seems like a classic case of expectations versus reality. Memory chip companies that are tied to the AI boom have been doing really well lately, so analysts probably had some pretty lofty expectations for Micron's future profitability. But the company's management seems to be taking a more cautious approach, maybe not wanting to overpromise and then underdeliver.
Underpromise and overdeliver, that's usually a good strategy, right?
It is. But Micron is in a really interesting position right now. They're a leader in the market for high bandwidth memory, or HBM, which is essential for these super powerful AI chips. They actually have a technological edge over Samsung in this area, and it's a market with only 3 major players.
Wow, so they're in a pretty sweet spot.
They are. And the demand for HBM is skyrocketing because of those next-generation GPUs like NVIDIA's Ultra, which require a ton of memory capacity and speed. So while the demand for memory and things like PCs and smartphones might be a little slow, the demand from data centers that are powering all this AI is growing like crazy.
So even though the overall memory market might be a little sluggish, there are these pockets of explosive growth.
Precisely. And it's not just an American phenomenon either. Over in China, Tencent recently launched upgraded versions of their DeepSeek AI models, which shows that this trend of improving AI model efficiency is happening globally.
It's fascinating to see how interconnected all these different parts of the tech world are. Now, before we wrap up, we have to talk about this amazing story. A cryptocurrency billionaire is reportedly investing half of their fortune into a startup that wants to build the world's first commercial space station. It sounds like something out of a science fiction movie.
It really does. It's incredibly ambitious, with the potential for massive rewards, but also a huge risk of failure. This startup is growing rapidly, but their success hinges on securing some pretty big contracts. They recently acquired a company called Launcher, which had some limited success in reaching orbit, and it seems like that was primarily a talent acquisition move. They're trying to assemble the best team possible, but the stakes are high. If they don't land those key deals, it could be game over.
Well, that's certainly a dramatic note to end on. But it's so inspiring to see people making these audacious bets, pushing the boundaries of technology beyond our planet. It's mind-blowing.
It really is. It shows the relentless drive to innovate, the willingness to take risks that defines the whole tech landscape. From the complexities of the stock market and antitrust regulations here on Earth to the cutting edge of AI and the birth of the commercial space industry, there's never a dull moment.
Never a dull moment, that's for sure. Thanks for joining us for this deep dive into the wild world of tech.
It's been a pleasure.
Thanks for tuning in to Byte-Sized Tech. If you enjoyed the show, don't forget to like, comment, share, and subscribe for more fun and insightful tech discussions. See you next time.